Well, one top technician is starting to see some trouble in the charts. Chris Verrone of Strategas is here to lay it all out. Hey, Chris, what are you seeing?
Hey, Mel, yeah, I think we're just at a point where we want to start to be a little bit mindful of the cycle. We put out a note this morning to clients with the title, Time to Raise Our Guard. And I just want to be prepared for a period of the market here that may be a little frustrating. And I want to put some historical comps into place. And we brought along a couple charts here. And the first one I just want to show you is a reminder that we're now about 13 months off the low. And when you look historically at the two historical analogs that we comp closest with, the first year off the 82.09 low, it was roughly in this kind of 13, 14 months off those bottoms where markets began to run into some trouble. Now, none of this proved fatal, but it can prove frustrating. So I want to be aware as we start to move into the weaker seasonal stretch of the calendar, we are competing with this collision of expectations and reality. And the first year of a new bull market, it's very easy to beat expectations. In the second year, that gets more challenging. I think the second thing that we just want to be aware of is under the surface, despite some really good data over the last 4 or 5 weeks, we've actually lost some pockets of this market. You know, we've seen small caps diverge, and the second chart that I'm showing you here is just the percent of stocks above the 50-day moving average, the S&P versus the Russell 2000. You still have something like 80% of the S&P above the 50. That number's 40% for the Russell too. So there's been a big chunk of market cap that really hasn't been on the field the last 5 or 6 weeks. I just think it's something we want to draw our attention to kind of in preparation for this weaker seasonal period. And then maybe most importantly for us, just in the context of leadership, looking at this third chart, which is consumer discretionary relative to consumer staples, we printed a 10% retail sales number last week, and we've actually had consumer discretionary underperform in the aftermath of that. So I think this all speaks to an environment where the expectations are pretty big, and it might not be as easy to live up to that going forward. So I want to focus on some names right now that I think in this little bit more challenging environment can offer some relative strength. And there's one in healthcare, Amgen, which has been essentially dead money for the better part of the last 7-8 months, starting to break out here, getting it up through that 260 level we think will be a big deal. It's also started to turn on a relative versus the S&P. So we've seen the relative improvement improve. We've seen the stock push up against 260. I think it's on the verge of breaking out. And I also find it really curious if we go on to the next thing here, that despite some really strong data, all the gold stocks have actually started to firm here. Here's Newmont Mining, NEM, just on the verge of breaking out above that 65 range. Again, a nice turn relative to the S&P. So I think in an environment where we're working towards a more difficult part of the calendar, where the comps are really aggressive, we just want to be on guard for some of these more defensive groups starting to show some leadership. We see it with pharma and biotech. We see it with gold here as well.
So can we broaden that statement out, Chris, and say, Amgen or healthcare, XLV is very multifaceted, let's say?
Yeah, absolutely. And when you look at what some of the big weights are in there, they're all kind of getting better. I mean, I think it's remarkable that since the vaccine pause, J&J's actually outperformed. That's important information, right? We always look for examples in this business when things don't go down when they should. J&J should have gone down on that news. It didn't. Pfizer has firmed. Bristol Myers looks better. AbbVie turning up. So I think there's a collection of these big cap healthcare names and a collection of gold stocks that are firming here as well.
All right, Chris, good to see you. Thank you. Chris Verrone of Strategas. I asked about XLV because, as you remember, Carter Braxton Worth of Cornerstone Macro also recommended healthcare as a defensive area of this market. So 2 strategists within the past week, 2 strategists, not just strategists or technicians, but 2 in the pantheon of technicians have recommended healthcare, Karen.
Yes, I like healthcare. I mean, I've focused mine on big cap pharma, just a collection of, Lilly, AbbVie, Pfizer, Merck, Bristol Myers, just because in the hunt for value, these are really value stocks. And I know you always, there's the bear case of, is the government going to be negotiating prices more heavily? And they're always sort of a target. I don't think they are so much of a target anymore. But these PE multiples and these, I don't buy things for dividend yield, but I'm not going to hold it against them that they have a good yield. So I like the space. It's moved a lot in the last 2 weeks, but I still think it has room to go. It's hardly close to frothy.
Chris liked the miners, and he had a little hat tip to Johnson & Johnson in the price action, so I have to go to Tim on these 2.
Yeah, I've mentioned I like J&J. I think the pharma, it's not just pipeline, but I mean, pharma growth is kind of upper single digits, more than peers, I think, there, and medical devices. But the gold call is really cool because, the great irony, of course, is that everyone's been talking about Bitcoin as they should have. We've seen some consolidation there. Gold's been left for dead. Like, if you like the miners, you have to, I think, like the metal, at least at this part of the cycle, because a lot of the low-hanging fruit in terms of balance sheet cleanup and whatnot is out of the way. Gold's been dead money since the summer. It's down 13% or so. And I actually like the chart on gold getting back above the 100 right about here. And if we get into a period where I think we have some concerns with the broader market, I think gold will outperform. And silver has been outperforming gold. So look at SLV as well.
All right.
Shepard Smith here. Thanks for watching CNBC on YouTube.